Welcome, dear traders. In the first week of May, analysts are ready to sum up some results of the first months of the fiscal year. Global financial markets were mainly overwhelmed by sell-offs that hurt painfully high-tech stocks. Investors were unnerved by a variety of headwinds, such as expectations of a sharp rate hike, geopolitical jitters in Europe that were disrupting supply chains from Russia, and new tough COVID restrictions in China. Will these snacks make an impact on the currency market? Let's discuss how Asian markets were trading on the first trading day of May. Previous New York sessions always set the tone for the following Asia-Pacific trade. The US economy and the Federal Reserve are the linchpins for market sentiment on the global scale. Experts warned that the global and major central banks have to adjust their policies to lingering inflation. Monetary authorities eventually acknowledged that soaring inflation is in no way a transitory phenomenon entailed by disrupted supply chains. They have to deal with the high prices for a long time. When it comes to the US stock market, its high-tech sector causes the most concerns. The Nasdaq lost over 22% from December 28, 2021 until April 29, 2022. High-tech stocks account for just 0.7% of the overall revenue of the S&P 500. However, the high-tech giants accounts for 12.2% of the S&P market capitalization. Such a big gap could become the largest bubble in the history of Wall Street. Any bubble is doomed to burst sooner or later. Anyway, the US Fed is terminating its ultra-loose monetary policy. And the threat of a recession amid an annual inflation rate of 8.5% looks more realistic. So the US stock market went on with its sell-offs on Friday and plummeted to the worst degree since 2020. All in all, the Nasdaq closed April with a 13.3% slump, having looked at the poorest monthly performance since October 2018. The S&P 500 tumbled by 13%. The barometer of the stock market's health has fallen the most sharply since 1932. The US dollar is an indisrupted winner as a safe haven asset. The greenback owes its strength in anticipation of the Fed's policy meeting. The US Central Bank is due to unveil its policy decisions on May 4. Until then, the US dollar is likely to flex its muscles. And the euro-dollar pair has been trapped in the bearish trend. Geopolitical risks and the differential between the Fed's and the ECB rhetoric give the US dollar the advantage in the currency pair. After a minor retreat and consolidation on Friday, the US dollar index resumed its rally. In the Asian session, the index was sticking to the upper border of the corridor between 103.11 and 103.53. The index is trading at 103.23 at the moment of preparing material for this video. The Japanese yen cannot assert strength. It's the weakest currency in the basket of 6 rivals of the US dollar. And on the back of sell-offs on Friday, the yen managed to win a few pips and tested the level of 129. However, the striking difference in the rhetoric of the US Fed and the Bank of Japan is to the greenback's benefit. The dollar-yen pair is firmly trading above the psychological level of 130. The currency pair is consolidating inside the corridor of 130.49, acting as a resistance, and 129.53 as support. Though Japan's economy is interested in the weak yen, it has hurt a lot of national companies. They had to increase capital expenditures, to be more careful in investing, and to refrain from raising wages. How long will Japan allow its national currency to stay weak? monetary authorities are not going to stem the yen's free fall. Now they say that the forex rate of 135 will cause an alarm. Japan is holding the general elections in July, and since Friday people have been celebrating Golden Week. The 4 national holidays within a week are reached without any COVID restrictions. Economists expect a sharp increase in consumer spending this week. Meanwhile, Australian producers are putting the burden of rising expenses on consumers. Wholesale sales prices surged to new highs amid the lockdown in China and the war in Ukraine. Will the Reserve Bank of Australia venture into the first rate hike in more than 10 years? We will know it soon, following the policy meeting on May 3. And currently, the key interest rate is held at a record low of 0.1%. Analysts expect it to be lifted by 15 basis points to 0.25%. On Friday, the AUD USD pair inched up to 0.7174 amid a decline in the greenback. The US currency was advancing in the Asian session today. The Aussie is losing ground due to a new COVID outbreak in China. Following the lockdown in Shanghai, the same measure could be introduced in Beijing. It means a decline in demand for consumer goods, commodities and energy. Everything that supports the Australian dollar in its trade with China. So today the Aussie is trading mixed inside the corridor between 0.7032 and 0.7084. And this trading week is going to be volatile. The focal point is the Federal Reserve's policy meeting. And the Australian Central Bank is also holding its meeting. On Friday, the US Labor Department will release the non-farm payrolls for April. And keep close tabs on global currency markets and see you online soon.